HIMS and HERS stock has been on a wild ride in the last month or so. I've had this stock rated as a buy for about 4 or 5 months, and for the most part, it's higher since I recommended it as a buy. But because of the recent volatility, a lot of my viewers are asking if HIMS and HERS stock is still a buy after these big fluctuations, and of course, after the big news on weight loss drugs that HIMS and HERS will not be able to sell a certain category of the weight loss drugs. So I'll answer those questions in this video and let you know if I still think HIMS and HERS stock is a buy by reevaluating the business, the revenue growth, the margins, the cash flow, and then looking at my valuation on my discounted cash flow model for HIMS and HERS and the forward price to earnings and price to free cash flow. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Looking back at recent years' revenue growth for HIMS and HERS, you can see the acceleration here in 2024, up to 95% revenue growth in the most recent quarter. But of course, the bigger news is that the forecast for 2025 that HIMS and HERS management gave to investors in their most recent earnings report indicated that they expect weight loss drugs to generate 700 million in revenue in 2025. Investors are a little skeptical that the company will be able to deliver that kind of revenue in that segment without selling the kind of weight loss drugs that they've been able to sell because of the court ruling that removed the shortage requirement that's needed for HIMS and HERS to sell that kind of weight loss drug. So this is a lot of near-term development that was going to be short-lived anyway. Longer-term investors understood that about HIMS and HERS stock, and the recent acquisition is a great fit for HIMS and HERS Health, and the category itself is ripe for disruption. The way people receive healthcare right now or in recent years, they've been extremely unsatisfied with their service. And so whenever you have a category like that, I see these categories as ripe for disruption. Another category like this was the dealership model of car sales. People did not like that model, having to go into a dealership, not knowing what price they're going to pay for a car, or having to haggle for hours with the salesman before finally arriving at a price that they may not be happy with. That's why companies like CarMax and Tesla were able to jump in there and offer consumers a different type of sales process with less haggle and more certainty on prices, and they disrupted the industry in that way. HIMS and HERS, I see a similar opportunity for the company to enter into the healthcare market, which they have been, and grow rapidly because people are so unsatisfied with healthcare in the United States for sure. Almost everyone I talk to is unsatisfied with the healthcare in the United States. So that's a big opportunity for HIMS and HERS, which is already capitalizing in these early days with phenomenal revenue growth. But more impressively, they are expanding margins along with these rapid increases in revenue. The operating margin rose to 4.2% on a trailing 12-month basis. That's up considerably from the negative 45% in 2022. And this is while the company is investing aggressively in growth, especially on sales and marketing. They've done a great job with marketing, bringing their company up to mainstream with all of their advertising and still generating a positive operating margin despite all those investments in advertising, which pay off over time. The advertising spending is great for businesses long term. You get an initial boost from the advertising if it's effective, and then it builds brand value over time and it grows exponentially over time. HIMS and HERS investing well in that category, and the returns from ad spending are showing to be very positive for HIMS and HERS. Similarly, but even better, their cash flow from operations at 17%, improving dramatically in recent years from those bottoms. The biggest difference between cash flow from operations and operating income are non-cash expenses like stock-based compensation and depreciation and amortization. That's why there's a big difference for HIMS and HERS in their cash flow versus their operating margin. This huge positive cash flow from operation also makes HIMS and HERS a less risky growth stock because it's now able to self-fund without any concerns that it might need to go to investors and ask for more capital. It's well on its way to generating sustainable cash flow in excess of its needs, and so that removes one layer of risk from a growth business. The returns on investor capital are excellent, especially given the early stages of the company's development. In just a few short years, it's already generating a 32% return on invested capital, which is very positive for HIMS and HERS Health. This is especially true when you compare its return on invested capital with the weighted average cost of capital of 11%. It generates an almost 3-to-1 ratio on returns on invested capital compared to weighted average cost of capital, which is great, and it's especially more impressive for an early stage growth company. Also, in my intrinsic value calculation on this discounted cash flow valuation spreadsheet, which by the way you can get access to if you join as a channel member, you can see all these discounted cash flow calculations. The intrinsic value per share I calculated for HIMS and HERS was $59 a share, and the current market price is $35 a share. So the valuation, when measured by my discounted cash flow, looks undervalued. I also did a valuation on the price multiples. The forward price to earnings ratio at 27.85 is a very attractive price for a company that's growing at the rates that HIMS and HERS is growing at, with the kinds of expansions in operating margin and cash flow, the returns on invested capital, and the massive opportunity in the industry it operates in. The price to free cash flow of 42 is also attractive. I would be willing to pay a much higher premium for a business with these kinds of prospects, but you're able to get HIMS and HERS stock at a much lower valuation than I feel like it deserves. So to update my recommendation, I already let you know that I had the stock rated as a buy for several months now. And today I'm updating that recommendation and letting investors know that I still think HIMS and HERS stock is a buy. So I do think this dip is a buying opportunity for long-term investors in this stock. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.